Hello traders at CMC Markets. Welcome to another update by RRG Research for Tuesday, when we will return back after Easter. I'm recording this on Thursday the 6th in the morning. So it's before the holiday and then we've got 2 weekdays before the markets will resume, and probably will be in very different places from where they are here now. But we'll do our best to give a commentary and our outlook using our relative rotation graphs. My name is Trevor and I am presenting to you from London. Today we'll start by looking at the global markets on an absolute basis. Then we will see that the Nasdaq is the index that's most attractive. We will see that it's the tech stocks, and we'll look at those popular FANG stocks in there, and the one that we favoured and how it has done, and I can tell you it has done well. We will then look at this fall in the dollar and where's the situation with regard to the other currency, the other choices you've got for it, and some of the one particular chart looks at indicates that this is a particularly opportune moment to go into that currency to participate in the weakness of the dollar. So let us begin. This is a weekly RRG graph. In the center here we have cash, so not the MSCI World, which we sometimes show. So that's the major stock markets versus the average of the stock markets, if you like. Here it's the stock markets versus cash. Now, all of them being to the right of 100 means that stock markets are doing well. Now, what is the direction of trajectory of them, and where are they huddled together? Here we've got the CAC, the DAX and the stocks all in here. So we've got all of Europe except the UK close in here, far to the right, so doing well on a relative basis, turning down southwesterly, but I wouldn't worry too much about that. I think that's quite natural to lose some momentum when the market is very strong. Markets are very strong. The Hang Seng, likewise, really there. Now, the outstanding trajectory and tail is the Nasdaq, and we keep on concentrating on that as we have been doing. The other US indices are also doing well. Australia is also on the right, but these are closer to the crosshair here. So the real best performance and outperformance and heading in a good direction on the weekly sampling is the Nasdaq. Now let's have a look at the same set of indices versus versus cash, but on a daily sampling. So each dot here is a day. Now over on its own on the right hand side, and also still pointing in an easterly direction, although it's a south easterly direction, but still very strong and compared to the other ones, and is the Nasdaq. So we're going to concentrate on that. The S&P looking good, the Dow looking good, the Hang Seng looking good, and Europe here is lagging a bit behind. Looking now at the US sectors, and we're observing the ETFs of the US sectors here now. And there's a very clear story here, isn't there? The two in the leading quadrant are the big technology sector, and also the communication services sector. So both effectively tech sectors. Then mostly everything else is in the lagging quadrant, and is a pull on the index and is looking weak. Weakest of all, and looking most horrible as it heads west, is the energy sector. Financials also still looking weak, although there's been some bouncing in the banks, but still looking weak as a sector as defined by the Financial Select Sector Fund ETF. This is a weekly chart of the Nasdaq index. Last year we were dominated by these lower highs. Tech was being punished and plunging hard. We came into a low, a lower low, a low and a higher low. We saw bullish divergences in the RSI and the MACD. We had this final double bottom here with a higher low as well on the MACD and the RSI. And since then we've gone up, broken this downtrend line, and that for us, this area in here was when we became very bullish, and it was first picked up in the RRG, that this sector that we were hating had now done its work and was ready for at the very least a bounce, and it started, and now we can see it's well underway. We've had a pullback and another advance, and the pullback we weakened a little bit on the MACD here, but the MACD is again separating from its signal line, indicating increased upside momentum. On the RSI, here's those divergences I was talking about. It's steady at the moment, but we've got two high. We've actually got a high and a higher high and a high and a very slightly lower high in here. So we're losing a little bit of momentum at this support level, which was the previous resistance levels at 13,000 and 12,800, which we have pushed through, pulling back to them. It would be natural for this index to settle around here and then start to push forward again, break out and then pull back and settle like it did here, break up, pull back, and then moved up after that. But we're in a strong uptrend. The next resistance, which is not that strong, is at 13,750, and that does look as though that's a target for it, but in the meantime there's a chance of some pausing taking place. This is a weekly RRG graph of the FANG group of technology high-flying securities, and again we can see a very distinct message here. Nvidia right out on the right hand side, pretty well on its own. Tesla, Amazon, Facebook, Google in the improving quadrant, but not looking particularly enticing. Netflix and Alibaba heading down towards the lagging quadrant. Twitter coming up nicely, but really there is one game in town really, which is Nvidia, and of course, bound to say, the one that we did pick right at the beginning of the turnaround and the increase in improved relative performance of the technology stocks after the rout was complete, as picked up, I think, almost first on relative rotation graphs. So let's have a look at Nvidia. Let's have a look at our friend Nvidia. Started off with a very long-term chart to include in the tech bubble, and here is the sell-off reaching its low 2002 at just a few cents really, and it traded between there and $10 right through to 2016. So it was in that tight range all that time, and then it's taken off, had another bubble if you like. But now let us come to today, and here we are. So we came down very hard with the whole sector. This could be a chart almost of the Nasdaq itself, but here we picked on this particular one as our choice of to participate in this this bounce. We thought it was at the beginning in the technology sector. We had the lower highs pattern, but the breaking of this high this week here was really the confirmation that the bottom was in place. We talked about at the time reverse head and shoulder, shoulder, head, shoulder, neckline across here. Let me put it in actually. So shoulder, shoulder, neckline, breakout here. So having first highlighted it here. The confirmation, strong confirmation came in here. Then we broke through the resistance at 230, and got an accelerated boost from that, and now we're soaring, continuing to soar towards the next resistance point, which is at 292. But this was really, I don't think, will represent too much resistance. It may hesitate there, but I don't think it's the type of resistance which might stop it. And very much in the sights is an attack on the 350 high here. 348.29 was the high. 346, sorry. Was the high for it, and that's where we look as though we're heading. The Bollinger Bands are very strong indeed, pattern there. You can see a widening out with it, so increasing momentum. The rate of climb is increasing. The power behind the move is increasing as it goes higher, as often happens. The crossover occurred here, and that's when we started to notice the lack of the loss of momentum on the downside in the sector. Here's the RSI, and moving up nicely. Yes, we have got a divergence in here now, so possibly we are going to hesitate at this high for a bit. But I think given the background momentum that we've got in the MACD, this will eventually take out that high. So it's looking strong. It's looking from the perspective of the MACD, it's looking stronger. However, we've got chart resistance ahead, and we do see that the momentum is the RSI is overstretched and has potential for a bearish divergence there. So some hesitation at that high is to be expected. And now look at the foreign exchange market. The relative rotation graph here, in this case it's a daily sampling, and we see that everything is to the right of 100, and 100 being the US dollar itself. So the dollar is weak, and the currencies to various degrees are stronger than the dollar. We're going to focus on the pound and the euro and looking for opportunities in these markets from the absolute chart. But let's quickly have a look at the dollar index, and this is that dollar weakness that we're seeing pushing the currencies over to the right hand side, and that weakness looks set to continue. It's coming. There is support at 101 on the dollar index, but the MACD, which looked as though it was going to cross, has now turned back down again, and the gap is widening there. It's weak and momentum is growing on the downside, and we see that also in the RSI. We had the strong down move, the rally took us above 50%, then down again, a resumption of the downtrend for the dollar. Here is a weekly chart of the euro versus the dollar, and here is the latest jump on this weakness of the US dollar towards resistance just above 110, that round number again could represent some noticeable resistance for the market. It's well supported, long-term support at 108, 106. We've got the higher lows pattern. The RSI has corrected in this period here and now turned up again, and the MACD, which nearly crossed down, has turned positive again, and the gap is widening. So it's looking okay, but it's got some meaningful resistance ahead of it. Moving to the pound, I think is actually at this moment breaking up. We came down, the MACD crossed, nearly crossed here on this correction phase here, which was more of a horizontal nature, holding the 118 level. Now we've got two tops in place at 124, and we're now pushing through that, I think, now towards the next resistance, which is quite light, which is at 127, and then the serious resistance starts at 130, where we've got a lot of activity above. But this MACD is the gap is widening here, so we've got some power behind, some lift behind this breakout, which I'm hoping it is. And we see here the RSI is soaring upwards and breaking its two previous highs here. So this means that this move here has got a lot of thrust and momentum in it. So of the two, choosing one over the other, I think the euro has got some headwind just above where we are now, which might be a little bit of a drag on it, whereas the pound has cleared that resistance level and is now looking like it's ready to take the next step to the next resistance level, which itself is not that strong. And given the amount of momentum there is behind it, and given the weakness of the dollar, this is the one I think that we will focus on. I will leave it there for this week. Thank you very much indeed. I do hope you have a good Easter break. Thank you for watching. Next week it will be Julius who will be presenting on behalf of RRG Research BV. Goodbye, my name is Trevor Neal. Thank you very much. May the trend be with you.